Inflation is increasing in the UK. If you're thinking about moving from Hong Kong to the UK, does inflation impact of when you move? Check out this video as we go through that detail. So in this question, we're going to be talking about people moving over from Hong Kong with their BNO visas into the UK, and when is the right time to move over? And it's always difficult to answer that because you've got so many variables. You've got your job, your home, businesses, activities, etc. But we do need to think about, well, hold on a minute. What about inflation, UK inflation? So let's talk about that, guys. UK inflation, what's the state of it, and interest rates as well. Let's talk about that. Chenji, what's your perspective on interest rates in 2021, 2022?
Wow, so very big topic. I think a topic that's in many people's minds, because you look at BBC News, you look at news across the world, and people talk about, oh, the prices of everything has increased. Just, I think yesterday, the US has released data that inflation has been at 6%, the highest it's ever been for the last 30 years. The UK, in a similar fashion, they predict inflation will be about 4% for this year. In reality, it may be higher. And that's quite, that's basically double the amount as before. That's double the inflation figure as the previous year. For our audience, maybe who have already moved to the UK, you may have realized that when you're driving outside, the price of fuel and petrol has gone up quite substantially. The price, you go to supermarkets, you might see there's a shortage of goods. And some of the goods have also, like vegetables and meat, have gone up quite substantially. So it's in a lot of people's minds. So, but again, the advice really that I have for this is just be smart with your cash. Be smart with your timing. In periods of high inflation, do things sooner rather than later, because again, the cost of things go up all the time. From anything from, okay, right, I have a half tank of fuel, right? I would rather fill up sooner rather than later. Okay, I've just moved here from Hong Kong and I have a substantial sum of money. I need to make this, I need to use this sooner rather than later, either in properties and traditional investment, because keeping it in the bank at the moment, because we're in a funny stage actually where we have high inflation and very, very low interest rates. So banks will give you very, very low interest rates. It's again, being good with your timing, and secondly, being smart with your assets in the UK. That's my opinion on this.
Mm-hmm. And I think in terms of inflation, just to add to that point, but if you are getting a home, for instance, and we'll come over to you, Simon, in terms of your views of inflation and how that impacts housing markets. But you could be buying furniture as well, which could be quite a costly amount of money. If you're buying brand new furniture, kitting your house out for the first time, it's going to cost you more next year, and the cost of tradespeople to fit those things in. So if you are refurbishing your property right now in 2021, I can tell you with absolute certainty that tradespeople are in high demand, and their prices have got this magic zero at the end of each quote, and they're getting that fee paid. So you do have to be a bit careful. 2022, I don't see any change in that either. So you do need to tread carefully when you're moving to the UK and how much you're going to be paying, etc. Simon, what's your views of inflation, interest rates, and the house pricing market potentially in 2022?
Yeah, Chenji raised some really great points. So for those of you who kind of just starting to look at the UK, historically our interest rates have been low for a long time. So since 2012. We had a long period where the Bank of England base rate, which kind of sets how we borrow money in the UK, sat at 0.5%. It had a small spell at 0.75 for around about 9 months off the top of my head. Then we were back at 0.5. And then for most of the pandemic period, we've been sat at 0.1, which is the lowest it's ever been since records began over 300 years. So the backdrop of this is that interest rates are really low in the UK. They kind of probably do need to go up a touch from where they're at the moment. And even if they were raised up a 0.25 or 0.5% from where they are at the moment, they'll still sit at where they have been historically averaged for the last 9 years. So I don't think interest rates are a bad thing, and we should think that that's the end of the UK as an investment destination. However, as Chenji says, inflation is twice the government's target of 2%, so it's actually at 4%, and typically it's probably a little bit higher than that because the measuring factors have a lag factor already into them. Should you invest in the UK in terms of property? Yeah, absolutely. I think it's really key that you've got to speak to someone like Chenji to look at your whole holistic portfolio, where you're at, what you've got, how much money you've got. Property typically is a massively great hedge against inflation in the UK. But just remember, it's a fairly illiquid asset. Once your money's in there, it's locked in there relatively for a good period of time. It can take you up to 6 months to release your money. So what you put there needs to be very carefully considered. However, typically the UK property market, and we've seen growth over the last 12 months of over 10%. Bear in mind also that you can get leverage off the back of your deposit monies. Creating a great return in the UK property market is still a great thing to do. Is the market going to continue at the kind of pace it's been at? Probably not. It's going to slow. However, we have a saying in the UK, you invest not for the short term in property, but you invest for the medium to long term. And if you do that and invest in property, generally the returns are very good, definitely inflationary beating, and should definitely be something you should consider doing without a shadow of a doubt. How does that affect interest rates? Yeah, they're going to go up next year. Mortgage costs will go up a touch, which is also going to add to inflation, but I don't think you should let that put you off. I guess we should also point out this isn't individual investment advice. This is generalized view of the UK. Seek specialist individual advice before you deploy your cash. And Chenji definitely, I think, would be my first point of call as you look across the shores, for sure. He can then decide whether potentially investing in property is the right thing for you to do. And then Simon and I can then advise how to structure that kind of thing so that it works best for you.
Yeah, I think you did a very good rhyme at the end as well. Offshore for sure. You're a poet, but you didn't quite know it.
I said no.
Chenji.
Add one quick one to this one. I think also what's in many people's mind is the currency, right? Moving here from Hong Kong will involve changing currency from Hong Kong dollars into pound sterling. And because of this inflation going on, again, it's a global thing. It's not just in the UK. The currency fluctuation has become more volatile because of this. So, again, it is important of your timing and just be always on track. I've had a lot of conversations already with clients about this. And I talk to, for example, I have a foreign exchange broker who actually briefs me on the situation all the time. So again, it's just being smart with timing and also just being moving quick when things are in your favor, because in an inflationary market, it's all about timing. It's all about timing.
Yeah. It's interesting you should say that, Chenji, because while Simon was talking, I was on the currency exchange index XE. Just to look at the exchange rate from dollars to pounds, which I think for future shows, we'll talk about this thing in terms of inflation, interest rates, and currency, because I think all three has a major impact on your financial decisions that you make moving over to the to UK. But to give you a bit of an idea, around about January 2018, the currency, and I'm talking about Hong Kong dollars to a pound, would get you, so it's 0.090. So you'll have to do some workings here in terms of the dollars to a pound. And if we go fast forward to January, we're looking at 0.096. Sorry, let me state that again, 0.096. So there's a bit of a change with that. Fast forward into January 2020, it was 0.099. So that was significantly different. January 2021, we're talking 0.0939. Currently, we're standing at 0.095. So clearly, you have to be watching for this, because moving significant amounts of monies from Hong Kong to the UK could have a major impact of, well, how much money will you get out of it? I make the mistakes, or I used to, typically of going to HSBC or another high street bank. Again, I'm not picking on HSBC, it's just because I bank there. But there is a danger of using your bank to convert currency. And Chenji, if you want to step in, why did I make that mistake?
Well, because it's the easiest way to do things. Go through your bank, isn't there? But again, with the whole decentralized economy, decentralized world, there are plenty of services now that are not dependent on the banks to facilitate these kinds of currency transfers. There are a lot of brokers out there where you can compare the best prices. Make sure, I work with a panel of members for foreign exchange. There are so many out there. Be careful, first of all, make sure they are regulated, right? So they have, strong backing. Make sure they are, again, first of all, reputable. And then look at, are there any hidden fees, right? So not just the headline rates, look at any hidden fees. And once that's all accounted for, then really it's just shopping the best price. That's what it is.
Perfect. Guys, that's a great set of answers for the inflation and interest rates.